Hello.
I know it might be hard to believe, but Tyler and Cameron Winklevoss, who the world got to know as the villains of the social network, who Mark Zuckerberg famously duped and turned their idea into one of the biggest companies in the world, might actually be at the forefront of a counterculture movement. I think from the outside, the world kind of wants to not like these guys. They're 6'5", blonde, Harvard grads, they grew up in Connecticut, their father was wealthy. They seem to have everything going for them. And yet, after being shunned by the mainstream venture capital community and being cut out of venture capital deals that Facebook had quite frankly overwhelmed, they went a different direction and found traction amongst the cryptographers and the counterculture world who are building the foundation of a new financial and global way of doing business. In the dozen years since Tyler and Cameron battled with Mark Zuckerberg, they've accumulated a fortune of $3 billion each. Everybody was skeptical about the Bitcoin and cryptocurrency world for years. They were even more skeptical about Tyler and Cameron Winklevoss.
We were not financial experts when we came to Bitcoin early on. We bought a lot of crypto on Mt. Gox, which famously imploded, and very few people were believers who actually imagined where this could go. So we thought for this to go mainstream, for this technology revolution to really happen, we have to build reliable, safe, trusted infrastructure.
In 2014, they founded the Gemini Cryptocurrency exchange. Unlike their nemesis, whose mantra was move fast and break things, Tyler and Cameron Winklevoss embraced an ask permission, not forgiveness mentality. Gemini is one of the most regulated cryptocurrency exchanges in the world, and while adoption for them has been slower than for some of the other bigger exchanges, they might be prepared for what some believe is the incoming onslaught of institutional adopters.
It started with building a bridge into the future of money, and then more recently, a bridge into the future of art. We think art should be digital. NFTs solve the digital scarcity problem.
In 2019, they acquired Nifty Gateway, an exchange for NFTs, or non-fungible tokens, that are now taking the world by storm. No, I have to talk about the twins, don't I? The other twins. Nifty Gateway was also founded by two twins, Duncan and Griffin Cockfoster, and in fact, these weren't just any two twins, they were two competitive rowers. What had started off as just a way to use your credit card to buy NFTs was about ready to become an entire marketplace for NFTs and a place to securely store them.
Quite frankly, as we move more and more closer to the metaverse, you'll want art in your online world.
I need to ask you, since you use it, if you could just please define it. What is the metaverse?
The metaverse is the recreation of the offline world in the online setting. I think a good example of the metaverse would be Fortnite, where people have signed in and they even have held concerts. In the early days, it was totally unclear whether people were actually going to move on to this platform. And we saw that with social networking. There was so much skepticism around, will people actually share their stuff online and and do this. And of course, we know how that's gone. Today, data of a social network is owned by that company. And in the future, we believe it will be owned by the individual who provides that data, whether it's photos or content or whatever. They will own that content and it's theirs. And quite frankly, it is theirs rightfully. We believe that.
If you take a close look at the companies, not only that they're building, but the companies they're investing in, you can start to read between the lines that a narrative is developing that what they are building could someday disintermediate Facebook, Amazon, Google, and many other centralized companies. The world that Tyler and Cameron accidentally ended up finding themselves in might actually make them the perfect nemesis for Facebook in a way that not even they ever imagined.
A year ago, GameStop stock wasn't on anyone's radar, trading at about $4 a share. This week, it hit $380 a share, fueling one of the wildest frenzies Wall Street has ever seen. So how did this happen? Well, back in April 2020, Dr. Michael Burry, the hedge fund manager famous for shorting subprime mortgages, also played by Christian Bale in The Big Short, he and his fund Scion Asset Management disclosed it bought 5.3% of GameStop at between $2 and $4.20 a share. In total, they spent about $15 million. Burry's play was to urge GameStop to use its cash to buy back its own stock, which would potentially retire about half its shares outstanding. In a letter to GameStop's board, he called for the company to exhaust its $300 million buyback authorization. Things in 2020 were not looking great for GameStop anyways. The company had lost more than $280 million in the first 9 months, and wasn't expected to turn a profit until 2023. And like what Netflix did to Blockbuster Video, the ability for people to download games directly to their consoles meant that there was much less of a need to visit a GameStop in person. The pandemic just added more holes to the sinking ship. Investors saw the writing on the wall and bet against GameStop, and some notable ones bet the stock would fall further and began a process known as short selling. Basically, you borrow shares of stock from a big institutional investor for a small fee, sell the shares at the current market price, and then wait for the price to fall. Once the price of the target stock falls low enough, you buy back the shares, return them to the lender, then pocket the difference. But this GameStop Vulture Patrol did not sit well with one group of investors. They were the anonymous members on Reddit's Wall Street Bets. Even before Dr. Burry had bought into GameStop, some members felt the stock was undervalued. They eventually rallied the forum to buy the stock en masse in an effort to boost the share price. Investors piled on, using call options to goose their returns. Elon Musk got in on the action, posting a cryptic tweet referring to Wall Street Bets. And Silicon Valley billionaire investor Chamath Palihapitiya put money down as well, then tweeted about it, and noted the greater social phenomenon at play on CNBC.
I think that what you're seeing is essentially a pushback against the establishment in a really important way. For a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk, and a lot of these kids were in grade school and high school when that happened. They lost their homes, their parents lost their jobs, and they've always wondered, why did those folks get bailed out for taking enormous amounts of risk, and nobody helped and showed up to help my family?
This battle between Main Street Redditors and Wall Street hedge funds has fueled a 1,555% increase in GameStop shares over the past month. It also made GameStop investor Ryan Cohen, the founder and former CEO of pet e-commerce firm Chewy, a billionaire, at least for now. He had spent about $76 million buying up more than 9 million GameStop shares at the end of 2020 in an effort to restructure the company. This also got him 3 seats on the GameStop board earlier this month. No one really knows how the GameStop saga will end. Even the investment app Robinhood restricted buying of GameStop stock on January 28th, as well as other heavily shorted stocks, such as AMC and BlackBerry. But even Dr. Burry, who arguably instigated this whole thing, says this squeeze is, quote, unnatural, insane, and dangerous. But according to securities filings reviewed by Forbes, it appears Dr. Burry may have sold off at least some and maybe all of his GameStop position before the fun really began. But if he had kept all of the 3.4 million shares he purchased for $15 million, it would be worth over $1 billion as of the closing price on January 27th.
You guys ready?
It all started with a Marshmello concert.
Let's go, let's go, let's go, let's go!
It was an interactive virtual event that took place within the popular video game Fortnite, and it was the first of its kind within the Metaverse. Metaverse, the word that's been popping up everywhere recently, is a virtual community. And within that community, people can play games, work, or in this case, attend a concert. Fortnite's concert was a huge success. Nearly 11 million people live streamed the event, and today that number is north of 60 million on YouTube. And that was just the beginning. A little over a year later, it was announced that rapper Travis Scott would venture into the virtual concert space, and just like Marshmello's, it was a massive success. Travis Scott's show proved how profitable these virtual concerts could be, and just like real-life concerts, there's merchandise to be sold. Lots of it. In addition to the physical merch, players can also purchase skins and emotes, which are dance moves and other actions your character can perform within the game. And all that can add up. Scott reportedly grossed $20 million from his Fortnite collaboration, including merchandise sales. That's a huge number considering his entire Astroworld tour from the year before grossed $53.5 million. Following Fortnite's success, other companies like Pokemon have followed suit, creating a virtual concert for its 25th anniversary with Post Malone in February. And in August, Ariana Grande hosted a virtual concert and is reportedly set to make the same amount as Travis Scott. And now, Justin Bieber is the latest pop star to announce a concert in the metaverse space, partnering with virtual entertainment company Wave. Wave's virtual concerts will be performed live, unlike Fortnite shows, and people will be able to send emotes that the performer can see in real time. It will be interesting to watch the evolution of these virtual concerts and the revenue they generate for the companies and the artists that partner with them.
Sam Bankman-Fried is a 29-year-old American expat who had lived in Hong Kong for the last few years, but actually just recently moved to Bermuda. He's notable for a number of reasons, but I think most critically, he is the richest 20-something in the world and the richest person in all of crypto with a net worth of $22.5 billion. What's most interesting about the way he raised this money is that unlike a lot of people that got into Bitcoin very early on, he started relatively late. He did not purchase his first Bitcoin until the year 2017, when he found a way to sort of arbitrage differences in the price of Bitcoin between US and Japanese exchanges, sometimes buying it and then selling it at a 30% markup. He did this over and over again until he built a small fortune. And then he used that in conjunction with some venture capital that he raised to launch an exchange called FTX. FTX just set a record for the largest private raise in crypto history. It brought in $900 million at an $18 billion valuation. Sam's inclusion in the billionaires list is really notable because, for one thing, the only person in the world that has ever gotten so rich so quickly is Mark Zuckerberg, who everyone has heard of. And I think that really speaks to the way that he was able to time the market to take advantage of the first mainstream bull run in 2017, where Bitcoin went up from about $2,500 to close to $20,000 in just over 6 months. And then how he was able to roll that into building an exchange that caters to more active traders that trade higher amounts at higher frequencies. And he's really in some ways become a kingmaker in the industry.
I first started looking into crypto not because of anything to do with blockchain technology. It just seemed like a good trading opportunity. That was sort of what my background was. And there are lots of signs that it was a space that had a ton of demand and a ton of excitement and interest and volume, but not very much liquidity. And what that means is there's a pretty significant chance that customers are not getting great prices when they're trading. For that same reason, there's potentially a lot of money to be made providing liquidity to those, being a market maker, doing arbitrage, and trying to sort of increase the efficiency and liquidity of crypto markets globally. That did turn out to be true. But it also quickly became clear that the space was in need of better infrastructure. When you think about the infrastructure in crypto, a lot of it is the exchanges. They combine a lot of different business models together, and it seemed like a really compelling opportunity to try to jump in and build something better.
He's a really interesting subject to report on for a number of reasons. I mean, first of all, his appearance. He's only 29 years old, and he typically wears a t-shirt or a sweatshirt that has the FTX logo on it, khaki shorts, and he has this big kind of poofy hair. It's funny, when we got a quote from Tom Brady for the story, who is an FTX endorser and owns FTX stock, he said the first thing that jumped out to him about Sam when he saw him on TV before they had even met is the fact that he needs a haircut. The second thing that really stood out is his transparency. I mean, he's very open to talking, and the reason I think is because he's raising all this money for a particular reason. He's a believer in a element of philanthropy known as effective altruism, where adherents rely on the use of data and modeling to find objective ways to do the most good possible with their money. There's a few different roles that somebody can play as an effective altruist, and he's chosen to be what's known as an earn to giver, which means he's going to try to earn as much money as he possibly can so that he can give it to people that are involved in actual charities to give the money away and have the most positive impact.
In the end, my goal is to do as much good as I can for the world. Mostly what I think about is, what role should I be playing here? And I think the most impressive people I know, the people who I've the most respect for and who are maybe doing the most good for the world are the people who are really taking charge of some of these initiatives to combat some of the biggest problems that we're facing as a society. But another way that one can have impact is by helping to fund some of these causes, and that's what I've been doing. So I got into finance in the first place to try and maximize the amount that I can donate to some of the most effective causes. I'd certainly love to be spending more time thinking directly about what these projects can be working on, but right now there are a lot of really impressive people doing that. I wish there were way more. My main role right now is to do what I can to help support them financially or any other way that I can.
The idea of when a philanthropist decides to stop earning and starts giving it away is a question that has plagued billionaires for a very long time. And it's something that's very applicable to effective altruists, especially earn to givers, because their job, or I guess their self-appointed job, is to just make as much money as possible. This would mean that Sam has very little say in where the money goes or how it's spent. He's just going to make as much as possible. And that's a really interesting question, because that's not the same model that other corporate titans have taken. I spoke with a philosopher and a professor at Princeton known as Peter Singer, who is sort of seen as one of the fathers of this effective altruist movement. And he said it's a very individual decision, and it's hard to know what the right thing to do is. He spoke to me about Bill Gates and how Bill decided to step down from running Microsoft to run the Gates Foundation, which is very much a full-time job. And he told me it's really hard to kind of do the counterfactual and wonder, was that the right decision? Obviously, Microsoft is still doing well, but perhaps it would be doing even better if he decided to stay in that role and not turn it over to Steve Ballmer. This is the dilemma that Sam's going to be coming back to time and time again, especially if and when his wealth grows and becomes more liquid. He actually told us right now that he has only about $200,000 in the bank account. And in the story, we wrote that one way that Sam is very much like a 29-year-old is that he's remarkably cash poor. But assuming that his business ventures go as planned, at some point he's going to have to wonder if it makes sense for him to give away the money, or if he's happy to keep trying to earn as much as possible and give it to trusted third parties and partners to give it away.
There was a time where if you Googled Shiba Inu, you'd mostly get educated on a cute breed of Japanese hunting dog. Search that now, and you'll also get plenty of articles about what has become the 11th biggest cryptocurrency by market value in one of the quickest rises ever seen.
S&P 500 closed at an all-time high today.
Shiba Inu, or SHIB, made its debut on August 1st, 2020. It aspired to be an Ethereum-based alternative to Dogecoin, another cryptocurrency based on the same dog and its subsequent memes. SHIB's starting price was fractions of a penny and was intended to be abundant with a circulating supply of 1 quadrillion. By October 27, 2021, SHIB really took off. The coin gained 680% in value during that month. It has since gone through the usual wild fluctuations we've seen with other cryptocurrencies, but still remains way up from its initial price last year. Insider even reported of one 35-year-old UK man who put in an initial investment of $8,000 and came out on the other side with $1 million, quitting his job as a warehouse manager. So yes, Shiba Inu may have started as a bit of a joke, but the financial gains can be very serious, and we do have some questions about where things will go from here. First, what factor does sheer enthusiasm play when it comes to the performance of an altcoin like SHIB? One thing you'll find out as you look into Shiba Inu is the community supporting it really loves it. Similar to the meme stocks of Wall Street bets, there's plenty of daily discussion on Reddit and other social media platforms about the token.
So the price jump is largely driven by the community, of course. They are the force behind the fact that major cryptocurrency exchanges, including Coinbase, now listed SHIB on their platforms. I think the 35 billion market cap should tell you something about how strong this community is, first of all. An India-based crypto exchange even went down largely because of the demand around the token.
The value of Shiba Inu coin actually depends on people power, and also interestingly there's a dose of FOMO among the Shiba Inu community, especially among those who think that they missed out on the Dogecoin boom. Some experts characterize supporters of Shiba Inu coin as fad buyers, but for now it looks like Shiba Inu coin is still very popular.
Another wild card to consider is Elon Musk. The Tesla and SpaceX founder has publicly stated he holds Bitcoin, Ethereum, and Dogecoin. And anytime he tweets about anything Doge, both that and Shiba Inu can see their prices fluctuate. Second question, does offering altcoins at such a low price increase the appeal of investing in crypto to a broader audience? Buying one full token of the more established coins like Bitcoin or Ethereum takes quite a bit of money, so many investors end up buying fractions. But part of the appeal with SHIB is being able to buy large numbers of full tokens for a low price per unit. Online, you do see investors cite the low price as an influence to buy in. And in the weeks since SHIB's rise, other low-priced altcoins have seen their values go up. But looking at the big picture, Shiba Inu might not be as widely distributed as the price would have you believe.
The ownership of Shiba Inu is heavily concentrated on a small number of people, and when I went to double check it, it turns out that top 10 wallets hold more than 70% of Shiba Inu coins. So while the SHIB community is very strong, when you look at the number of people who actually hold a coin, it's heavily concentrated on a small number of people.
Finally, does having an anti-establishment vibe help increase SHIB's appeal and value? While Shiba Inu is not GameStop, there are overlaps in the online dialogue and excitement around its rise. And like GameStop, you can see an undercurrent of sticking it to the financial establishment and CNBC analysts who may not necessarily take crypto as seriously.
Wouldn't it be amazing if we could stop talking about Bitcoin and start talking about stocks sometime?
The white paper itself talks a lot about community, decentralization, freedom, revolution, and it also states tearing down a long-established paradigm of formulaic success. So yes, I would say definitely that there's a component of decentralization and trying to break away from traditional method of trading.
And one unique element for Shiba Inu's situation is that it does have a direct rival.
Many saw Dogecoin back in the day as anti-establishment after the GameStop craze and other meme stocks kind of cooled off. And now with Elon Musk supporting Dogecoin, you could even say that Dogecoin is now part of the establishment and Shiba Inu is now anti-establishment. And with this kind of price war that they have with Dogecoin, this competition, I think, does add up to the growth that we are seeing.
It's still too early to tell in the long term if Shiba Inu becomes a relatively stable token or tanks like the Squid Game coin. But it's safe to say it has defied all expectations and is definitely one asset to watch as we head into 2022.
Chelsea Manning has had quite the interesting journey. She came into the public eye in 2010 as a soldier and intelligence analyst for the US Army. After becoming disillusioned with the war in Iraq, she intentionally shared more than 700,000 government documents with Julian Assange, who published them on WikiLeaks. It was the largest single data leak in US history. The documents contained everything from highly sensitive diplomatic cables that many believe put US lives at risk to video showing US soldiers killing civilians. She received the longest sentence ever doled out to a whistleblower, 35 years. And after serving 7 of those years, she received an unconditional commutation of her sentence from US President Barack Obama. Depending on who you ask, she's either a traitor or a hero. Since then, the world has largely gotten to know Chelsea from her witty observations on social media, ranging on everything from gender rights to national security. But behind the scenes, she's been establishing herself as a security pro, consulting with a number of privacy-focused startups. Ironically, the network everyone references as the dark web, the one she used to send classified documents to WikiLeaks, was actually developed and largely financially supported by the US government to protect spies and other government agents operating online. While serving her sentence, she had come up with a better way to cover the tracks of other online users. Over the years, the Tor network that she was using had shown signs of vulnerability. There was evidence that this once bulletproof technology could be tracked, and the identity that people thought was being protected was actually exposed. Making matters even worse, this technology was largely supported by the United States government, which not everybody trusts, and other Western governments, which not everybody trusts. What she had conceived of in prison was a way to inject what amounts to data noise, information that doesn't mean anything, into information that does, making it much more difficult to decipher unless you had the secret code. After Chelsea was released from prison, I think just like anyone else in that situation, she spent a lot of time getting her sea legs, so to speak. I think being free was difficult for her. She had actually spent more of her adult life in prison than she had free. And it wasn't until she was contacted by Harry Halpin, the CEO of a company that's building NIM Network, that she started to really see a way forward to turn her past experience into a new way to earn money for herself. People love her tweets. She just started a TikTok, and she was really kind of starting to go down this path of being an influencer. But when Harry contacted her and asked her for her professional advice, I think that she and others started to view her experience in a different way. In particular, what she provides is a very, very rare insight into inside the belly of the beast, right? Once identified as a very strong patriot, she very much wanted to protect the lives of her fellow Americans. She leaked the information that she leaked because she thought it was the best for the country. And even though she's since made a lot of enemies, I think that she still wants to do what she thinks is the greater good. The partnership originally started very informally. Harry literally sent her an encrypted direct message at like 2 o'clock in the morning one night. And Chelsea woke up and saw the pitch. As I understand it, it was a pretty short little message, but it got her attention. She cleared her schedule the next day. The two of them engaged in some back and forth. He shared the papers that he had that described his technology. She helped him sort of refine that a little bit by helping him out more as a friend, I think, than a business professional. But after a meeting in Brooklyn in July, that started to formalize a bit. In fact, I was there for part of that meeting and got to hear them sort of bounce around some ideas for how they could use Bitcoin to reward the people that were operating the nodes that were providing this technology. What we could end up seeing is an alternative to Tor that leverages lessons built by one of the most famous people who ever used Tor. But instead of paying for that with money provided by big businesses and big governments, there's an incentive mechanism built into the actual act of running these nodes that rewards people with Bitcoin. It's important to note here, there's no guarantee this works. In fact, I asked Chelsea directly, what's the biggest obstacle to making this happen? And she laughed and she said, writing the code. But it is largely just an idea. It's an idea that is being built by Harry Halpin, who worked with Tim Berners-Lee, the creator of the World Wide Web. It's an idea that's being refined in consultation with Chelsea Manning, one of the most famous users of Tor. But whether or not it actually does what it sets out to do, it remains to be seen. So the NIM network isn't in isolation. There's actually a rising tide of young startups that are looking to build alternatives to Tor. And interestingly, a lot of them are leveraging blockchain technology. Past incarnations of this privacy technology really relied on the goodwill of governments and big businesses that thought privacy was good for them. But what's happening now as a result of Bitcoin and other cryptocurrencies is there are companies using new ways to build business models that can do the same thing, but from a for-profit perspective instead of relying on people's goodwill.
We've heard it all before. Record labels are going to die. And while non-fungible tokens, otherwise known as NFTs, may or may not be what kills the traditional record label, they're already forcing the industry to adapt.
We have watched technology change the world and the labels be behind over and over and over. We're not content to do that again.
Depending on your point of view, it's either a revolution, a lucrative publicity stunt, or the latest gasp in the decades-long undoing of the traditional music industry. Most people know about NFTs because of the mania this spring surrounding a few auctions of digital art. Musical NFTs are no different, except that in addition to any artwork, they come with audio files. Even though the buyers of these NFTs are just anonymous numbers floating in the blockchain ether, musical acts can use that access to market and sell new music, fresh artwork, concert tickets, and even old-fashioned merchandise. Done right, NFTs offer the ease and ubiquity of internet distribution, somewhat like Napster, but with the digital rights protection built in. Think iTunes, but without Apple. We've already seen a growing list of startups targeting the space of blockchain as a distribution method for music. Jay-Z, Mark Cuban, Ashton Kutcher, and others have already invested nearly $100 million in a number of companies using blockchain as a form of music distribution. As everyone from musicians to managers and even labels themselves rush to cut out as many middlemen as possible or keep from being cut out, the future of music weighs in the balance. To understand how NFTs are changing the music business, you first have to understand how the music business operates today. Currently, labels take home the vast majority of the recording profit. Roughly 85% of album sales after expenses go back to the businesses, the labels, not the musicians, the artists, leaving those musicians to divide what little remains between songwriters, agents, and managers. The rest they earn on the road. An important distinction to make here is that some musicians are doing NFTs as art, while other musicians are doing NFTs as music. So what we're talking about here is really the second category. This is potentially really powerful because it's a new way to distribute the music itself and not just a new way to sell artwork and other digital objects. When I spoke with Kings of Leon drummer Nathan Followell, he had this to say about the impact of NFT albums and songs on the music distribution industry.
record deals have lost their value in a way, whereas 20 years ago, the thought of getting a record deal, you're like, we've got it made. We're going to go sell 1 million records, and we're going to make all this money, and bands were able to do that. But nowadays, it has lost its value in the sense that a kid can make a record on GarageBand and put it out on TikTok, or put it out on as an NFT, or put it out in any form. It's almost like they don't need to rely on the record industry as much as they used to, which in turn I think is making the record industry kind of panic a little bit.
Record companies are eyeing the rise of NFTs as possibly more dangerous than the pirated MP3 files that sent the industry into a death spiral 20 years ago, but also potentially as miraculous as the streaming technology that has since revived it. Each of the 3 major music companies have set up NFT task forces. They've brought in everything from the law departments to sales and marketing to figure out how to not only keep from being disrupted, but to ensure that they hold on to their existing market share. The most advanced team is at Warner Music, helmed by their Chief Digital Officer, Wana Ruxandra, who in addition to making the first NFT investment by a label, is working with her competitors to reimagine the entire music business.
One of the things that has been the downfall of the music industry is that we compete very heavily against each other, and then tech comes and they eat our lunch, right? And we're still competing with each other and won't talk.
I think it's important to note, though, that this isn't the first time that technologists have claimed that the music industry was on its back heels. In fact, we've seen this many, many times in the past. CDs did not kill the music industry. Streaming did not kill the music industry. Each time we've seen the potential death of the music industry heralded, we've actually been reminded of the value that they bring. In fact, these big, bad, evil companies still exist for a reason, and that's that they're really helping out their musicians. But what this technology could do is make it easier for the undiscovered talent to find their audience in the first place.
I'm excited to announce the 3rd annual Blockchain 50 list of billion-dollar companies taking blockchain and cryptocurrencies seriously. Notably, this year, we had a big difference over the previous 2 years in that we saw institutions and enterprises actually using cryptocurrency itself. In past years, we had seen mostly that these big, well-known companies were really looking at the underlying technology, which is called blockchain, and looking at other ways that they could use it to bring efficiency to their internal systems, but they were a little reluctant to get into Bitcoin, Ethereum, and other cryptocurrencies. This year, we saw that starting to change. Another big trend that we saw this year was a decrease in the percentage of companies from the United States and an increase in companies from Asia, generally speaking, but specifically China. I think if you look at those 2 trends together, you will largely see the biggest identity shift in this year's Blockchain 50. On the cryptocurrency side of things, there's 2 that really jump out. The first is PayPal. Obviously, this is one of the biggest payment companies in the world. Last year, in 2020, PayPal took the giant step of letting its 30 million merchants receive Bitcoin as payment for everyday goods. Before that moment, people largely thought of cryptocurrency as an investable asset, something more like gold than a dollar. And they were buying it and they were holding it. Now, I think that to a large degree, that's still happening, but PayPal's building technology that is specifically meant to make it easier and even to encourage people to spend Bitcoin. Now, if this happens, it would be a monumental shift for the cryptocurrency space. The second company that I think best highlights the rise of institutional use of cryptocurrency is Square. In a lot of ways, Square is a competitor to PayPal, famously led by Jack Dorsey, who last year came out swinging as a big supporter of Bitcoin, not only as a way to spend money, but as an investable asset. He has done everything from create software, nonprofit organization that is giving away intellectual property related to cryptocurrency to making it easier for his customers to invest in cryptocurrency. We removed Facebook, Google, Amazon, and one of the most widely used cryptocurrency companies, Ripple, from our Blockchain 50 list. While all of these companies continue to use and explore blockchain, we just thought that when we looked at some of the other companies and the seriousness with which they were exploring the technology, they just weren't competitive anymore. They were replaced by a rise of companies in Asia. There's one in particular that I think we just have to highlight. It's the biggest bank in the world. They have almost $3 trillion in assets under management, the Industrial and Commercial Bank of China, which is so big it's hard to even really think of it as a bank itself. They have dozens of blockchain applications, and they've gone far beyond blockchain experiments. These are live applications that are doing everything from letting small businesses get loans in real time to simplifying the way that imports and exports move across borders. In years past, there was a lot of concern about privacy issues and regulatory concerns for these big institutions using public blockchains. But technology is evolving, and the ability to protect people's privacy while still using public blockchains is increasingly becoming a reality. And what I think is going to happen in future years is we will see a movement from these permissioned blockchains that are really cool, but maybe a little less efficient than public blockchains, to public blockchains, where they have the best of both worlds. Their consumers' privacy can be protected, but they get the added efficiency of using a ledger that is truly public and truly open and truly anybody can build on it.
Mark Zuckerberg recently announced that Meta is the new name for Facebook Inc. He stressed the metaverse puts people at the center of technology and is more than a mobile app. Up until a few months ago, metaverse was not a word thrown around in everyday conversation. And now that word is everywhere. And guess which famous twins identified that area first?
As we move more and more closer to the metaverse, you'll want art in your online world. And I think that people already play a lot of video games where they're buying goods and services inside the games, but they can't really take them out of that walled garden universe.
Right, and I had to go and use the word metaverse, didn't you? I need to ask you, since you used it, if you could just please define it. What is the metaverse?
The metaverse is basically the recreation of the offline world in the online setting. I think a good example of the metaverse would be Fortnite.